You think the boat market's slowing? It's already sinking. And interest rates are the iceberg. Payments that once cost $600 a month now stretch past $1,000. Buyers are backing out. Dealers are sitting on inventory worth millions, depreciating by the day. And somewhere in that mess is your resale value, quietly slipping beneath the surface. How did rates push an entire market underwater? Who's dumping boats before winter storage hits? And when's the right time to buy or bail out? The buying frenzy hangover. It started like a gold rush on water. During the lockdown years when travel stopped and people chased escape, boats became the symbol of freedom. Buyers lined up at marinas and dealer lots, waving checks before the engines even cooled. Boats that once sat for months sold in hours. It didn't matter if it was a faded sailboat or a brand new power cruiser. Everything moved. Prices climbed until used vessels cost more than new ones. For a while, no one questioned it. It felt like the start of a new era where every weekend promised open water and easy profit. But the numbers tell the truth. According to the National Marine Manufacturers Association, total new boat sales are down roughly 9% year over year. The same dealers that bragged about record months are now staring at docks lined with inventory. Listings read like regret. Lightly used. Only one season. Priced to move. Buyers who thought they beat the system are realizing they just overpaid. The frenzy burned hot, but the hangover hit harder. And the first real pain came from the banks that made it all possible. Interest rates repriced the dream. When money was cheap, everything looked affordable. A mid-size cruiser financed at 5% felt manageable, even on a fixed income. Dealers encouraged it. Why not lock in a low rate? But within 2 short years, that same loan jumped to 8 or even 9%. The difference doesn't sound huge until you do the math. On a $200,000 loan, that rise adds tens of thousands in interest over the term. Monthly payments that were once $600 suddenly feel like a mortgage. Dealer finance sheets now show deals falling apart before delivery. Buyers who thought they had approval are getting new quotes that make the dream impossible. Even well-qualified customers walk away when they see the totals. And when buyers walk, inventory stalls. You can see it across major classifieds. Hundreds of boats marked price reduced, yet still unsold. For anyone watching rates tick upward, this isn't a mystery. Expensive credit kills luxury faster than bad weather. What's surprising is how quickly confidence vanished. Boats that symbolized independence have become expensive reminders of debt. And when the loans dried up, so did the illusion, leaving behind owners who suddenly realized they never needed the boats they bought. If this breakdown's opening your eyes to what's really happening out there, hit like so more boat owners see it. And drop a comment. Tell me what prices you're seeing near your marina right now. Impulse buyers turn to sellers. Now the same people who race to buy are the ones desperate to sell. Scroll through listings on Boat Trader or walk the docks and you'll see the pattern. Under 50 hours. Only used one summer. Must sell before winter. These aren't flippers. They're ordinary buyers who got caught in the hype. They imagined weekends on the water, not maintenance bills and storage contracts. Once reality hit, the enthusiasm sank fast. Marinas are filled with boats that still smell new, yet owners already want out. Some admit they can't afford the payments. Others just stopped using them. They thought they were buying a lifestyle, but what they bought was responsibility. One that costs thousands every season. Each listing is a quiet confession that the dream didn't match the math. The emotional high of ownership faded into the pressure of upkeep, and now those regrets are flooding the market. But you don't have to take their word for it. The first hard receipts are already on paper, and they tell a story the industry can't spin. First receipts of the crash. The proof isn't hidden, it's public. In recent quarterly reports, both the National Marine Manufacturers Association and MarineMax confirmed double-digit declines in sales across nearly every major segment. That means fewer new boats shipped, more used boats sitting, and a market where sellers outnumber serious buyers. For an industry that thrives on momentum, this kind of slowdown spreads fast. Dealers start trimming prices, then trim staff, then quietly call suppliers asking to delay deliveries. At the same time, auction data shows late-model boats fetching 15 to 20% less than last year. Dealers whisper about canceling future orders because their floor plans, the loans that let them keep inventory, are costing too much to carry. It's the clearest sign of a market shift. Not panic yet, but the start of something bigger. The charts that once pointed up are flattening. And for the first time in years, the numbers no longer lie. And those numbers, they're just the beginning. Because what's happening next isn't just about prices falling. It's about an entire system starting to buckle under its own weight. The inventory wall. Walk through any marina right now and you'll see it. The silence of boats that aren't moving. What was once a revolving door of deliveries has become a floating parking lot. Dealers who bragged about sold before arrival are now stacking boats like unsold cars in the back lot. Online classifieds tell the story in numbers. Total listings are up between 40 and 50% compared to last year. It's the first time in more than a decade that used and new inventories climb together. Buyers, sensing the shift, have stopped rushing. They scroll past listings and wait for price cuts. Every week that passes adds another unsold hull to the count, giving buyers leverage they've never had before. One broker admitted off record that his clients now name their price, and sometimes still walk away. That's how bad it's become. A market built on scarcity is drowning in surplus, and each day the pressure builds. And the longer those boats sit, the heavier the cost becomes. Not just in lost sales, but in the quiet interest payments dealers can't escape. Floor plan pressure. Most buyers never hear the term floor plan, but it's the lifeblood of a dealership. Every boat you see lined up under the sun is financed, not owned outright. Dealers borrow money from banks to stock their lots, betting they'll sell before the interest eats them alive. When inventory turns fast, it works. But when sales freeze, that same system turns lethal. An internal dealer bulletin leaked last month showed what's really happening. Interest costs on floor plan loans are up more than 30% year over year. Some dealers are paying thousands each month per unit just to keep those boats sitting. The longer they sit, the more money burns. One Midwestern dealer told me his profit margin on a new model vanishes completely after 90 days in stock. That's why you're suddenly seeing deep cuts and price to move banners. Not generosity, just survival. For you, the buyer, this is where opportunity starts. Dealers under financial strain negotiate faster and deeper. But it's a fine line, because behind the showroom smile, panic is setting in. And it's not just the dealers feeling it. The factories that feed them are starting to choke on the same slowdown, and they're making moves that could reshape the next season. Manufacturers hit the brakes. Upstream, the slowdown is impossible to ignore. Builders that spent the last few years expanding are suddenly scaling back. Brunswick Corporation, one of the biggest names in marine manufacturing, cut its production forecast for the year after orders dropped double digits. Other original equipment makers quietly followed, delaying new model launches and reducing shipments to prevent a glut. What used to be a bragging race for who could build faster has turned into a careful retreat. Inside the plants, overtime vanished. Some seasonal contracts weren't renewed. Even component suppliers, the folks making the engines, electronics, and upholstery, are reporting fewer purchase orders. When manufacturing slows, the pain spreads beyond the docks to entire towns that depend on those jobs. Dealers frame it as inventory management. But workers know the truth. This isn't about managing. It's about surviving the stall. For buyers, factory slowdowns mean one thing: more leverage later. Production cuts today lead to discount incentives tomorrow. The trick is knowing when to time it. But timing only matters if buyers still believe in the market. And right now, confidence is evaporating faster than any dealer can print a rebate flyer. Confidence collapse. The financial side was bad enough. What's worse is the psychological collapse that followed. The boat market, more than most, runs on emotion. Dreams of freedom, family weekends, the open water. When optimism fades, so does demand. And that's exactly what's happening. Search data from Google shows interest in boats for sale has dropped sharply since mid-year. Attendance at regional boat shows, once shoulder to shoulder, is down by double digits. Even cash buyers are waiting, convinced prices will fall further. Dealers feel it in the silence of unanswered calls. Confidence is like wind. Once it's gone, nothing moves. Boats sit covered, engines cold, sails frozen. Everyone's waiting for someone else to act, and the standstill deepens. Winter costs force liquidation. Every year, the first cold wind flips the market. For boat owners, winter isn't just a season. It's a bill that never stops growing. Once the leaves start to turn, every month on land costs money. You pay to haul out, to shrink wrap, to store, to insure. A small cruiser can run more than $1,000 a month just to sit still. Add fuel stabilization, battery maintenance, and spring prep. And suddenly that affordable hobby turns into a financial anchor. For owners strained by high payments, winter costs feel like a second mortgage. Listings surge from October to December as people refuse to pay for regret. This year's off-season inventory breaks records. Sellers are flexible, and cash or pre-approved buyers hold power. The cold always turns desperation into discounts. But for many, winter bills aren't even the biggest problem. The real pain hits when lenders start changing the math mid-deal. Financing fallout. Banks used to love boat loans. Easy collateral, loyal customers, good margins. But when interest rates climbed, lenders got cautious, and approvals started disappearing. Buyers who thought they were greenlit suddenly find their loan under review. The reason is simple: rising rates and falling values make boats risky assets. A deal that looked solid in July can fall apart by October because the same model is now worth 10% less. Dealership memos now warn pre-approvals aren't final until funding. Banks are backing out midstream, leaving buyers with tougher terms and bigger down payments. Deals collapse, sellers panic, and cash buyers gain leverage, often saving 10% or more. In uncertain markets, cash truly becomes negotiation power. And while financing collapses grab headlines, another problem is creeping up quietly. The day-to-day costs of just keeping a boat afloat. Hidden costs finally loud. The hidden expenses of ownership are no longer hidden. They're shouting from every marina invoice. Insurance rates climbed by double digits after last year's storms. Dock fees that used to rise by a few percent now jump 20% in a single renewal. Maintenance isn't cheap either. Parts are harder to find. And labor rates keep climbing. A routine service that cost $500 before the pandemic can now push close to $1,000. Fuel costs add up fast. And when you include storage, cleaning, and maintenance, the dream turns expensive. Many owners admit the burden. Used low-hour boats flood listings because upkeep drains roughly 10% yearly. It's not lost passion, it's lost affordability. The water's sparkle now costs too much. And when those costs pile up, a pattern emerges. One that feeds on itself, dragging prices even lower with every new listing that hits the market. If you're watching the market shift and don't want to get caught off guard, subscribe now. I track the numbers, dealer moves, and timing windows every week so you know exactly when to act and when to wait. Regret feedback loop. This is where emotion meets economics. Every new seller who cuts their price resets the floor for everyone else. Buyers see a cheaper listing and use it as leverage, forcing others to match it. Before long, the market chases itself downward. Auction data confirms it. Late model boats are selling 15 to 20% below their 2023 highs. Dealers know this, and so do private sellers. But no one wants to be the first to admit it publicly. It's a feedback loop. Falling prices breed regret. Regret fuels more listings, and listings drag prices lower. Until inventory clears or rates ease, patience pays. Wait, watch, and strike when prices flatten. Each month pressures sellers more. Your best opportunity arrives when rates drop or factory rebates return. Because while regret drives the sell-off today, the next act reveals how timing, not luck, decides who actually wins when the market resets. 3 possible resets. Every market crash ends one of 3 ways, and analysts in the marine industry are already sketching the outcomes. The first is a rate drop. If central banks ease borrowing costs, financing becomes affordable again, pulling buyers back into the game. The second is a discount wave. When dealers slash prices to clear their lots before their floor plan loans eat them alive. The third is consolidation, where weaker dealerships fold, and the survivors buy inventory at pennies on the dollar. Each scenario reshapes the resale math for current owners. Forecasts show rates may ease by mid-2026, but inventory stays high. The next months favor prepared cash buyers. Timing matters. Early or late could cost or save thousands. But timing that turn isn't about wishful thinking or luck. It's about understanding the rhythm of the calendar and how sentiment fails to follow the seasons anymore. The calendar trap. For decades, boating ran on a simple cycle. Winter meant markdowns, spring meant optimism, and summer meant buying. But that rhythm broke in 2025. Sales that should have rebounded in the spring stayed flat, even as weather warmed. The usual boating season bump simply didn't appear. Buyers weren't waiting for sunshine. They were waiting for proof that prices had bottomed. National Marine Manufacturers Association data shows spring 2025. Sales lagged nearly 15% behind 2023 levels. That's not seasonal. That's structural fatigue. Hope doesn't drive demand anymore. Spring didn't save sales, and dealers still face unsold boats. Today's market moves on psychology, not seasons. Buy only when inventory drops, not when temperatures rise. Which brings us to what every viewer really wants to know. If you plan to buy, how do you do it safely and smartly while everyone else hesitates? Smart Buyer Playbook. If you've waited this long, you're already ahead of most buyers. The key now is patience with purpose. First, track the listings in your region every week. When you start seeing the same boats dropping prices 3 times or more, that's the sign of fatigue. The seller's ready to deal. Second, bring real financing or cash proof before you start negotiating. Dealers treat prepared buyers differently when their floor plan costs are mounting. Third, always check build year versus model year. A 2024 boat built in late 2022 could already be 2 years old in depreciation terms, even if it's new. A 30-foot cruiser dropped from $240,000 to $210,000 in 3 months. 2 price cuts. Waiting saved 12%. Patience wins. Don't rush. Let inventory work for you. Because the next move isn't emotional, it's mathematical. One number, tracked by every serious analyst, tells you exactly when the downturn ends and recovery begins. Final metric plus warning. The clearest signal of recovery in the boating market isn't sentiment, it's data. Specifically, the dealer inventory to sales ratio. It measures how many months of stock a dealer holds relative to what they're selling. The National Marine Manufacturers Association says the historical healthy level is about 2.5 months. Right now, the average sits closer to 4. That gap explains everything. Too many boats, not enough movement. Until that ratio drops back under 2.5, prices will keep sliding, no matter what dealers promise. Watch closely. When price to move tags vanish and deposit required appears, the market's turning. Until then, patience and cash win. Wait for data. Never trade logic for excitement. The storm that started with easy loans and impulsive buying is finally slowing. What comes next belongs to those who waited, watched, and learned. The sea always resets. And when it does, the prepared are the first to sail. The tide's turning. And this time, it's not in favor of the sellers. Inventory's stacked. Rates are biting. And patience is finally paying off. The winners will be the ones who wait, watch, and move when others panic. So stay sharp, stay informed, and remember, every storm clears eventually. When it does, the smart buyers will already be ready. Thanks for watching, and if this helped you see the market differently, hit subscribe. The next wave of truth is coming soon.